valuations. Mitesh is back with us. So there's about 6 minutes to go for market opening. Mitesh, 9-10 calls?
I'll go with the buy on Piramal Enterprises. I think, Prashant, it's reversing from a oversold level with a very strong turnaround yesterday. Buy with the stop at 880 for a first target of 930.
All right. I mean, Piramal Pharma also, the other one, did very well. I think ended higher for the second straight session. But Piramal Enterprises picked up pace back to about 900 or so. Amara Raja is going to be in focus as well. On the back of earnings, let's revisit that. Sonia.
So I think the reason why the stock is up 6%, right, in pre-opening is because the margins have been spectacular this time. It's been a 140 basis points year-on-year improvement in their margins, but the important bit is if you see the trend, the margins are above 13% after 5 consecutive quarters. So it was ambling in this range of about 10 to 12 odd percent and now back at 13% plus. Even the commentary from the management is very positive. So you have a robust demand in the automotive sector from aftermarket as well as the OEM segment. Exports are very healthy, especially in the Middle East and Southeast Asian markets. They say industry battery volumes have picked up quite a bit, especially in the telecom segment because of the 5G rollout in India. And now they've announced a fresh lithium-ion battery manufacturing subsidiary because of the pickup that we're seeing in electric vehicles. So all in all, good set of numbers, positive commentary, but the margin uptick is the big positive.
All right. Well, that explains why the stock is up by close to 5.5% in pre-open itself. But the other big winner in the second half of trade yesterday was Bank of India, and the management sounded extremely confident, and Abhishek said those numbers are quite good. He joins us to tell us what a brokerage is making of it. Abhishek?
Well, brokerages are surprised by the fact that, Bank of India reported such strong numbers. So we have Morgan Stanley who has written a note. They have upgraded the stock to overweight and raised the target price by nearly 80% to about 95 per share from 53 per share. So core operating profit has beaten them by 60% in terms of their estimate, helped by higher margins or the net interest margin that has spiked up. So they have raised earning estimate by more than 20% for FY24, 25, etc. And they expect ROA of 0.7% for FY24 and about 0.8% for FY25. We also have Credit Suisse on Bank of India. They have an underperformance rating with a target price of 42 per share. They say that the margin uptick has failed to lift the profitability. So they adjusted for the higher net interest margin and lower fees. They have raised earnings estimate anywhere between 3 to 6% over the next couple of years. So despite the macro tailwinds on asset quality and improving growth, core operating profit actually is weak for Bank of India is what they have said in their note. Back to you.
Okay, thanks a lot for that. A couple of more quick stocks to watch before the market opens. After Morgan Stanley yesterday, CLSA today has raised earnings estimates for domestic two-wheeler companies. So they have said that the two-wheeler industry volumes will now, they've raised their assumptions by 4 to 8% over FY23-24. They believe that the festive season was very strong for domestic two-wheelers, and the higher volume forecast is led by the premium motorcycle segments. We've seen it with Eicher's spectacular numbers, as well as the scooter segment. We saw it with TVS. So they've raised their volumes estimates for Honda, Bajaj and Eicher, and this is the second upgrade coming in on Bajaj Auto in the last 2 days. Yesterday, Morgan Stanley upgraded the stock. Today, CLSA has upgraded it to a buy. They also maintain their buy on Eicher Motors, although they have downgraded TVS Motor to a sell because of the price appreciation, and they've downgraded Hero Motor to an underperform because of the weakness that we're seeing over there. But a quick comment from Vivek on IEX. Let's find out how that did. Vivek.
Well, that's right. So IEX, gave the October operational update, multiple headwinds playing out there. Volumes are lower on a year-on-year basis, both on the back of a high base, and lower REC in the renewable energy certificates also is lower. Improved availability of coal has ensured that prices too are lower, and along with that, sellers also have stayed away on the back of capping of prices. The management commentary in terms of the coming month also is that winter generally demand is lower, and they expect prices also to go low. So except some softness as far as IEX is concerned today.
All right, Vivek, thank you very much for that. So that's the commentary. There's about a minute to go for the market opening. It's absolutely flat. I mean, it's almost as if, the market, it's like a runner, right? Or a hiker. Yeah. We've all experienced that, right?
Catching your breath.
You catch your breath. The fastest goes up, catches their breath, waits for the others to catch up. And I think it's something similar, perhaps, to that analogy, what is playing out here. So you don't go down. I mean, you wait there, wherever you are.
I think in a marathon, what you do is you can't keep sprinting, right? You have to run a little bit, then catch your breath. And if this is a big marathon that the Indian markets are seeing, then perhaps today is just the day when